Do you want to work every single day of your life? Do you want to retire old and have little time left of your life to enjoy? And do you want to live paycheck to paycheck with little money to spend on yourself? If you answer no to any of those things, stay along and watch this video. It will mean a lot. Stay tuned. So today we're going to be talking about your and mine and everyone's future, and how you can get a grip on your future now and start planning for your future and your retirement before it's too late. So according to CNBC, nearly 15% of Americans have no retirement savings at all. Don't be a part of that 15%. But if you are right now, then that is alright, and just stay along, listen to this video, and by the end of this video, start thinking of different ways. Write them down on your phone, on a piece of paper, whatever, in your head, to start getting a hold of your future for retirement. I'm going to split this video up into 3 different categories, I guess you can say. 1 is savings, 2 is investing, and 3 is having multiple sources of income. So let's start with savings. So we get a understanding of what retirement is and how much money you should have saved and all that stuff. So first, retirement. When you retire, you should have enough money to cover your yearly expenses until you croak. According to CNBC, by the age of 30, you should have 1 year of your savings saved up. If you make $55,000 per year, they want you to have $55,000 saved. By the age of 40, you should have 3 times. By the age of 50, 6 times. 60, 8 times. And by the age of 67, you should have 10 times of your income saved up. Now, let me tell you why I personally don't agree with these numbers. You're probably not one of those people who want to work every single day of your life for the rest of your life and retire at an age where you don't have that much time left of your life. That is why I don't agree with those numbers, and I personally think between 30 and 40 you can have a lot more than only 1 or 2 times of your income saved up. So the next part of savings we're going to talk about, we're going to look at a chart of how much percent of your income you should save to retire in a certain amount of years. So we're going to switch to the chart right now. So starting with number 1, if you want to work 66 years of your life, save 5% of your yearly income. Now we can all save way more than 5%, so let's cross that one off the list. Let's go down a little to about the 10 to 15 years. So for 10.5 years working, you should save 65% of your income. Now, I think you can save more than 65% of your income if you really keep track of your money, you budget your money, and you just live below your means. If you save about 70% and work like 15 years, that is even better. Now let's switch back to me. Oh, what's up, guys? Now, working saving 70% of your income and working 15 years, that's gonna give you more money to retire with. But you guys are smarter than that, and smarter than the 15% people who have 0 retirement savings at all. So you guys are gonna have multiple sources of income and have a lot more money saved up for when you retire. How, you might ask? Well, let me explain. So going on to the second stage of this video, we have investing. There's multiple things you can invest your money into. 1 should definitely be a Roth IRA. Starting as soon as you can. You can open one when you're 18 years old, but let's just round up into 20 years old. I'm going to switch to a calculator right now. And assuming you start off with $0 in your bank account, or you're just broke and have $0 and you have a job, and you put in the maximum amount of money you can put into a Roth IRA, which is $6,000 a year or $500 a month, with a 6% return starting at the age of 20, and your retirement age is 60. Now, I'll talk about that in a second. Almost $930,000 saved up. Now, the reason why, let's switch back to me. Now, the reason why I put 60 years old for retirement, even though I'm talking about retiring early, is because the Roth IRA is the money you should just put away and forget about it and make monthly payments to. And by the end of the year, you should put in $6,000 or the maximum amount of money you can into that Roth IRA to build up over your years. Don't touch that money. I suggest you don't touch that money until you are 60 years old. Let's just check if this is still recording. Yep, we good. So, don't touch that money until you are 60 years old. Why? Well, because at the age of 59 and a half, I don't know who came up with halves. I thought that was only like a thing we do like under the age of 12. But 59 and a half years old, that's when you can start pulling out your Roth IRA tax-free. Compared to a regular taxable savings account, it's a $3,000, almost $3,000 difference you will have in your Roth IRA. But before that, so we skip back another like 30 years, 20 years, when you retire early, if you want to do that around 30 years old, 40 years old, you're going to have multiple sources of income. We will get to that in a second, but we're going to take a trip back to the investing stage of this video, where one was the Roth IRA, which is a good. Another one, you can invest into real estate, go buy rental properties if you're into that. If not, that's okay. There's multiple things you can do. Invest into the stock market, invest into companies in the stock market with dividends. All that could be money you be getting you can use for some of your expenses, your monthly expenses, like your mortgage, your rent, your car loan, health insurance, phone bill, all of that good stuff, which is good, because then with your main source of your job, whatever you do for a living, now you can take that money and save 70 or more % of that income, the $6,000 a year, put into your Roth IRA, and whatever money is left, you can put into the stock market or real estate. Now, move on. We're going to skip forward into the multiple sources of income category of this video. So, have your main job that pays you the most amount of money. On the side, when you're not working, either you get home early, you have the rest of your day to yourself, use that time, weekends, summer, whatever, whenever you have time, do a side job, which you can use a suggestion from the last video I made, or you can have another side job that you do to be making you more money just on the side that will supply you money to cover more of your expenses, and some you can save that money too. So have multiple sources of income. A rental property would be another source. Dividends will be another source of income. All that good stuff. Now when you quit your job and retire basically, you can use that money from those sources of income, like the dividends, your real estate properties, use that money to cover your expenses until you reach 60, and you can start pulling from your Roth IRA. However, just because you can take the money out doesn't mean you should. Use the 4% rule, which is they suggest you only take 4% of your income each year, so you have enough money to cover you until you croak. Another big thing, live below your means, guys. Come on. If you live below your means for 10, 20 years, you're going to have the rest of your life to just have fun and maybe go Dunkin' and Starbucks and buy a coffee that you missed out on for the last 20 years. Make your coffee at home. It tastes just as good, I promise you. Don't buy a brand new car. Don't get the latest iPhone if your phone is still good. Don't buy a brand new computer. This right here is a school computer. It is what it is. Don't go out buying the fancy designer clothes and stuff just because it looks good. Who are you trying to prove? Don't be trying to prove anyone nothing. Just focus on yourself, guys. Get that money. Save that money. Retire early. You can do it. We can all do it if we put our minds to it and focus on our goals. I will see you guys at retirement in our 30s. So, I hope you liked this video. If you did, let me know down below. While you're down there, it'll mean a lot to me if you gently tap that like button. While you're down there tapping the like button, might as well hit the subscribe button so you can watch new videos when I make new videos. Let me know ways to improve. I hope this helped you, and I hope you can all budget your money, get a hold of your money. If you have any questions, drop them below. I'll answer every single one of you guys. And just have a good week and a good weekend, and go get that money, guys. See you in the next video.